markets across the globe have been a little wobbly for a few weeks now. The reason is pretty much due to the fears of rising interest rates and increasing bond yields, which have frequently sparked a sell-off in tech stocks since the start of 2022. I'm Rachel Jones and this is Kalkinemedia. In almost every policy meeting last year, the Fed did acknowledge high inflation, but at the same time, it also reassured people against any rate hikes. This is what made investors sure that no rate hikes were coming last year, and therefore equities had inflows despite high inflation. But now rate hike fears are looming, which is why equities and other riskier assets are undergoing correction. Investors are no longer considering equities as a hedge against inflation. So how will the Fed's stance on interest rates impact global markets? Well, investors are worried that the Fed's policy changes and the possibility of an interest rate hike might quickly slow down the economic recovery amidst the ongoing coronavirus concerns. When the central bank increases the interest rates, it tends to make borrowing more expensive for businesses and consumers, decelerating the pace of economic revival. If the Fed increases interest rates in March this year, one can expect other central banks to follow suit, especially as developing economies face the risk of seeing big falls in their currencies if they do not follow the US central bank in raising rates. This is because an increase in interest rates can make the greenback stronger while increasing import prices for developing economies. Although advanced economies may not shift in that direction so decisively, those witnessing high inflation and decent economic growth could eventually contract monetary policy. Meanwhile, the Fed's decision could also influence the US trading partners to trim the monumental support provided throughout the pandemic. So what could that mean for Australia? Well, speculations are rife that the Reserve Bank of Australia could embrace interest rate hikes sooner than expected. National Australia Bank expects the central bank to increase interest rates in November 2022, with subsequent hikes in December this year and February 2023. Strong labour market performance and record high inflation prompted the bank to predict earlier than expected rate hikes. All in all, the Fed's decision to increase interest rates could create a ripple effect on most of the economies, urging them to raise rates. Meanwhile, the move might not rule in favour of stocks due to the increased cost of borrowing for businesses. However, it will be interesting to see how economic recovery will take shape when the pandemic-era stimulus is withdrawn. Now, if you did like the information in this video, you can like, share and comment on it. You can also subscribe to our YouTube channel and press the bell icon for notifications for our latest videos. I'm Rachel, signing off for Kalkinemedia.